Hey everyone, today we are going to discuss the business model of another wealth management player. I'm talking about 361 WAM. 361 WAM is a competitor of Nuama and is one of the largest pure play wealth management players in India. So let's just dive right in. Let's start with the brief history of the company. 361 was established in 2008 as IIFL Wealth Management Limited. In the initial years, the company focused on expanding its client base and established offices in Dubai, Mauritius, and US. By 2012, the company expanded its client base from 300 to 3,700 and crossed the AUM of 25,000 crores. In the subsequent years, the company focused on scaling its asset management business. The company launched India's first success fee based alternative investment funds. The company also made some inorganic moves in this space, and by 2014, the company became the number one alternative funds manager in India. In 2015, General Atlantic acquired a 21.6% stake in the company, and after General Atlantic's entry, the company made some more inorganic moves. In 2017, it acquired an NBFC named Sheffice Capital to add the lending portfolio to complement its wealth management offerings. In 2018, the company acquired two wealth management firms in Bangalore and Chennai. And in 2019, the company got demerged from IIFL Holdings and got listed on NSE and BSE. In 2020, the company made another major inorganic move and acquired L&T Capital Markets Wealth Management Division. In 2022, the company rebranded itself from IIFL Wealth to 361 WAM, and 361 basically represents the holistic view of a client. And in the same year, Bain took an entry into the company and acquired 25% stake, and General Atlantic made a full exit. Currently, the company is operating with an employee base of 1,200 plus and a client base of 7,000 plus families with sizable AUM of 1 crore plus per family. Recently, the company also acquired ET Money to enter into the wealth tech space, and that was a transaction of about 366 crores. So that was about a brief history of the company. Now let's talk about the business segments of the company. Look, 361's core business is to manage and invest clients' money. So broadly, the company operates in two segments. One is wealth management and the other is asset management. So let's understand the proportions in the wealth management one by one. The first one is obviously investing solutions. 361 calls it 361 plus. So here the company offers two types of proposition. One is advisory proposition and the another is discretionary proposition. So this propositions basically means the level of engagement with the client. So under discretionary proposition, clients just hand over the money to the company and do not have the final say in the investing decisions. The fund manager takes the ultimate investing decisions on behalf of the clients. So that's the discretionary proposition. Under non-discretionary proposition, it's more of an advisory and the ultimate investing decision lies with the client. So 361 helps the client with building their portfolios, asset allocation, risk management, diversification, etc. So that's the investing solutions offered by 361. Another one is product distribution. So like Nuama, 361 also follows the open architecture platform. So through 361, the clients can invest in any mutual funds, PMS or AIF schemes. The third one is transaction and broking services. So here through 361, clients can invest directly into equities, bonds and even in unlisted securities. So that's the broking services that 361 provides. Fourth one is corporate treasury. So here the company offers caters to the corporate client base where they have the treasuries, but they don't have the dedicated teams to run it. So here 361 provides services like investing solutions, risk management, cash management, liquidity management, hedging, etc. So that's the treasury proposition offered by 361. The fifth one is lending solutions. Here 361 provides loans against shares, business loans, personal loans to their wealth management clients. That's the complementary offering along with all the wealth services that 361 provides. And the last one is estate planning. So here, look, the HNI and ultra HNI clients have diversified asset base, right? Like financial assets, immovable properties, jewelry, arts and artifacts, etc. So the question is, how do these assets transition from one generation to another generation. So 361 helps with this succession planning, will drafting, power of attorney, managing estate taxes, etc. So that's the estate planning services offered by 361. Now let's talk about the asset management division. So under asset management, the company invests client funds into different strategies under public equities, private credit, and real estate funds. So for mutual funds and PMS, the company runs various strategies like diversified, concentrated, liquid, thematic, etc. Talking about alternates under private equity, the company runs various funds like early stage, growth stage, late stage, pre-IPO opportunities, etc. Under private credit, the company invests in mid-market opportunities through their fixed income funds. And also they also invest into special situations of large issuers. So that's private credit. Under real estate, the company invests in commercial projects, housing projects, and infrastructure projects. The last one is large value funds. So these large value funds are the type of EIFs where each investor commits at least 70 crores of capital. So 361 runs this large value fund as well. So that was about the business segments. Now let's talk about the service model of 361. So the question is, how do they acquire and serve clients, right? So wealth management industry in general has adopted a relationship-based approach to serve HNIs and ultra HNIs, and 361 is no exception. So typical 361 relationship team has one senior private banker, one junior banker, and one distribution RM. And this team of 2-3 bankers can serve about 100 wealthy families. And 361 has 80 such teams capable of handling about 8,000 to 9,000 families. Talking about vintage, 63% of this ultra HNI clients and 61% of senior private bankers have been with 361 for more than 3 years. So that's a good vintage enjoyed by 361. Another thing that I want to highlight is that the AUM per family, especially for ultra HNI client base with the vintage of more than 5 years, is considerably higher for 361 than the competitors. That's because the company's focus up until now has been the ultra HNI segment within the wealth management industry. So that's why this AUM per family is considerably higher for the company. So that's the service model of the company. Now let's talk about various revenue streams and broad economics of these revenue streams earned by 361. So 361 earns primarily from two types of AUM. One is transactional and broking AUM, and another is recurring revenue AUM. So what is this transaction and broking AUM? It comprises of brokerage income from executing transactions in listed equities, fixed income instruments, and block deals on NSE. The company also earns from upfront fees on managed products and referral fees for investment banking referrals, right? So that's the transactional and broking revenue that the company earns. Now, on a direct basis, the company earns about 80 to 100 bips of yield on this transactional revenue, but only 25 to 30% of transactional revenue churns every year. So effective yield on overall transactional AUM comes to about 25 to 30 bips. So that's the story of transactional AUM. Coming to recurring revenue AUM, here the company earns from the recurring AUM streams. The client keeps on deploying the funds for this wealth management and asset management propositions, and and 361 earns from managing those funds. So it's essentially the management fees that the company earns in this revenue streams. So first is advisory revenue stream. So here the yields are lower, 30 to 35 bips, because the ultimate investing decision lies with the clients. Under discretionary, the yields are a bit better at about 45 to 50 bips. Talking about listed equities, the yields are 60 to 65 bips. Under private alternatives, the yields are the highest at 130 to 140 bips. For distribution AUM, the yields are about 45 to 50 pips. The last one is carry income that the company earns. So now this carry income is the share in the profit from alternates business. So for private equities and for other alternative strategies, the share in the profit at the end of the year is called carry income. Now that fluctuates based on the market performance, based on 361's performance, but that's basically the revenue stream earned by the company at the end of the year. Talking about the financial performance, let's discuss the most important metrics for 361, which is the asset under management. So from FY20, the company made it a strategic priority to move from transactional AUM to recurring AUM. Now, both these types of AUM have grown similarly in the last 3-4 years. The important thing to note here is that the share of recurring revenue from this recurring AUM has increased from 65% to 72% from FY22 to FY24. So that reflects the improvement in the business quality of 361. Coming to the net flows, you need to understand two important things about this net flows. First is net flows is the money, fresh monies received from the clients for the investing purpose, right? So it's like a second order driver for the asset under management for 361. And usually net flows are hover at about 12 to 15% of the opening recurring AUM. So that's one point. And second is in 361's case, about 35 to 40% of this net flows are received from the existing client base, and 55 to 60% of net flows are received from the new client base. So as you can see that even the existing client base contributes significantly to the net flows received by the company. Third one is cost to income ratio. Now, cost to income ratio is basically looking the profitability inversely, and this cost to income ratio has moderated from 51% in FY22 to 46% in FY23. That reflects the operating leverage in the business. But in FY24, this cost to income ratio shot up to 49% because the company is making the investments in the next growth areas. We'll discuss that in a while. So that's about the cost to income ratio. Lastly, the dividend payout. Now, 361 is not a capital intensive business, and its P&L has a significant operating leverage as well. So the company was having the dividend policy of distributing 70 to 80% of the net profits to its shareholders. Now the company has changed the policy to 30 to 50% of the payout of net profits, because the company is investing in developing new growth areas, products, and upgrading its technological platforms. So that's about the financial performance of the company. Lastly, let's talk about the growth strategy of 361. Up until now, 361 has been focused on serving ultra HNI customers with the AUM size of 25 crores and more. But the company wants to leverage this clientele and penetrate into HNI segment or the mid-market segment. The company has already built a platform to serve HNI category of clients, and the management is estimating that HNI segment could be as large as ultra HNI segment in the next 3 to 5 years. ET Money acquisition is going to give the company a head start in this area. The company also wants to target the global clientele, including NRIs who wants to invest in Indian products through Singapore and GIFT City locations. The company has recently hired 25 to 30 relationship managers, which is going to increase the company's capability to serve even more families. The company is investing in all these growth areas, and that's why the company has cut the dividend guidance for the next few years. So that was about 361. If you like the video, please do share the video and hit the subscribe button to help us grow.